This video is sponsored by the award-winning Daily Market Movements trading platform. To open a live or demo account, simply visit dmmtradingplatform.com.
Hello guys, it's Max here from Daily Market Movements. Welcome to another episode where today we're going to be analysing the S&P 500 futures chart. Just before we start today's video, anyone who's interested in joining my free analysis group over on Telegram, then please do not hesitate to scan this QR code on your screen. Let's start here by looking at the S&P 500, currently trading at 4,050. Now we are approaching a very crucial area here as this circle shows you, on two previous occasions, you could even argue three previous occasions, we've been rejected by this downtrend that we've been trading in since the beginning of the year. So 12 months of lower highs, which has ultimately led to this massive bear market where the S&P 500 is off its all-time highs. From a percentage perspective, it's still around 15% off its all-time highs, but down at the lows we were as bad as 27%. So we've had a very nice move from those October lows, but this is where it gets interesting. And stocks are very expensive at current levels, especially with earnings coming down. There's big expectations that earnings are going to come down to $200 on average, and at this current price level, it means that stocks are very frothy, and I would not be surprised to see a meaningful pullback in the coming days and weeks. And what does this mean? It doesn't mean you have to go straight back to cash, but you just have to be very selective in what you own. You don't want to be owning any major growth stocks that are trading at 60 or 70 times next year's earnings, for example. You really want to trade in more of a defensive manner, and find stocks that pay high dividends, etc., as we go through probably the next quarter or two. Of course, January we go back into earnings season again, and that's when we're going to hear from a majority of these companies, and the guidance is most likely going to be weak, and that will probably cause a pullback in stock. So if you were a buyer down here in October, I would definitely look at current levels to start taking profits, and then allocate those funds into some really strong stocks from a dividend and value perspective. But if you've been owning any high growth tech, for example, now could be the perfect opportunity to take those profits. I feel like if we break below the 200-day EMA, then we go to 3,911. But if we do bounce off it, there is always a potential that we could go a little bit higher here, maybe up to 4,150. But I really don't see us breaking above there. What's interesting, though, of course, is the Dow Jones 30. The Dow has actually broken out of this downtrend, so I'm going to keep eyes there. But at this moment in time, the S&P 500 looks quite frothy up at these current levels.